Hiya, this is Thinking Solo. I'm Ryan DeRusso, a fee only financial advisor. Today, I want to take you through what financial planning is. There's a ton of misconceptions and misinformation out there about financial planning. Many people think it's just investment management. Others assume it has something to do with taxes. Others still might think it has something to do with paying back debt. In reality, everyone is correct because the financial planning process takes a look at all your personal and business assets to help you reach your financial and life goals. This includes improving investments, reducing taxes, cutting debt, and much, much more. I'm going to take you through the process to give you an idea of what financial planning is, and hopefully by the end, there won't be any misconceptions. Let's get started. Financial planning is a comprehensive process that helps you set and achieve your financial goals, both in your personal life and within your private practice. Essentially, it's about creating a roadmap that guides your financial decisions so you can live the life you desire while building a solid financial foundation. In order to achieve this, we need to know where you want to go. That's where the setting goals is so important to this entire process. Goals vary person to person. Some want to retire at 55. Others want to keep working until they can no longer move. For me, as a financial planner, I'm not here to dismiss your goals. I will offer advice if the goal isn't achievable under the current circumstances, but I want to find a way so you can reach them. The first and most important part of the financial planning process is this goal setting. Within this, with this in place, we can now figure out what you should do and how to get you to reach the goals you have in mind. Within this, it's also important that we will develop both personal and business goals. That way, we're focused on each, both reaching dreams while balancing your professional aspirations. Effective cash flow management is the heart of financial planning. By tracking your income and expenses, you gain a clear understanding of where your money is going. This helps you make informed decisions about saving and spending. You can identify areas where you might be overspending or allocate more resources towards investments that align with your goals. The same goes with debt. If you have a bunch of high yield debt, you could be sapping all your resources just to cover your credit card bills. Cash and debt management is a balance. Having too much cash can be a problem. Having too much debt is almost always an issue. But using both cash and debt in ways that can help your business grow, fund your goals, and secure your future is a big part of reaching your financial plans. That's why cash flow and debt management is something that planners tackle at the beginning. We're wanting to understand this area of your finances to ensure the short-term asset usage and liabilities aren't hindering long-term plans. You probably think about investments as returns and losses. As a planner, I view investments differently. I'm less worried about short-term gains and losses. After all, the market will fall, the market will rise. What matters is, do you expect your investments to gain enough over time to reach your financial goals? This mindset changes the approach to investing. I'm not worried about the latest fad. What I'm focused on is, do you have enough risk in your investment profile to reach your goals in the time frame you have set for yourself? This shift is a big reason index funds are so key to the process. We can access the risk you need at very low cost, sometimes free, to allow your money to grow faster than inflation. With that in place, we can then build a plan to fund the investments, ensuring your portfolio grows to the size you must have in the future. Now, we want returns and we want less losses, but when we're looking over decades, the returns will come. It's just whether we're funding the account enough to reach the mark you need. That's the focus when analyzing your investment portfolio. Then it's ensuring it's done in a tax advantaged way, reducing the costs your investments are exposed to. This is really what retirement planning is all about. For some people, it is retirement planning. For others, it's financial independence. Depending on the goal, I focus on the tools that make sense for both short-term and long-term tax and savings needs. It may adjust through time. Plus, you have to plan for other areas of life, like healthcare or long-term care. This all falls under that retirement bucket. When you file your taxes with your accountant, they're looking backwards to determine how much you owe. There's only so much you can do by that point to reduce taxes. What financial planning involves is looking forward to reduce your exposure to taxes each and every year, as well as throughout your life. Essentially, everything a financial planner evaluates is under the guise of saving on taxes. Should you save for retirement? There's a tax impact on that decision. What type of business structure should you select? There is a potential tax impact on that decision. How should you repay your debt? Again, there's even a tax impact on that decision, since some ways people pay debts have a significant tax bill attached to it. As a planner, I'm looking both at the accounts you fund in the future as well as the steps you take today to reduce the tax exposure. When I'm working in an advisory role, I may also coordinate this with a client's accountant to ensure that yearly tax bill remains small. As for insurance, I'm fee only, which means I only get paid by my clients, not an insurance salesperson. So when I look at a client's insurance needs, I'm evaluating what do they need to pay for coverage to protect their wealth. This may be term life insurance, or it could be disability. But whatever we suggest, it's because it's important to outsource that risk to an insurance company, not because I'm making extra money off of you for the suggestion. One unique aspect of financial planning is the scope that I take when looking at a client's finances. While I'm looking at everything I've mentioned to this point, I also evaluate what it can mean for the heirs or those who come after the client. In essence, we want the client's assets that pass on to heirs or towards charitable goals that are maximized in any way possible. Sometimes that's ensuring the right wills or trusts are in place. Other times it's speaking with the client about planning the business for when they're done working. After all, selling the business can provide significant assets to a person's net worth. In fact, it's an issue that I would say many therapists ignore. But knowing the assets are secured can provide significant value to your post work life, while also allowing for the largest possible estate to pass to those you love. That essentially sums up the process, but it involves so much more tailored advice. For each area of concern, we're looking at these issues through the lens of how it will help you reach your goals. That can mean many different solutions depending on your needs. Have you any questions about financial planning? Let me know in the comments below. This is Thinking Solo. I'm Ryan DeRusso, and I'll see you next time.